Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. Now, we've just experienced two of the most volatile days in the stock market that we've seen in quite some time. And still yet, we managed to get a tremendous gap trade off this morning, which goes to show you the power of these price levels and how the market in the stocks that we trade will respect these price levels over and over regardless of the market conditions. First, let's describe exactly what gap trading is, and then I'm going to show you in detail an example of the trade from this morning where you can see on the screen why, and you see the horizontal line running across the screen. We nailed the low today right before a tremendous rip higher. Gap trading is when stocks are gapping higher or lower at the open. It creates an opportunity for traders. And the opportunity is when traders can identify a specific price where these stocks are likely to have a reaction in the other direction. In my course at LazyGapTrader.com, traders learn all the criteria necessary in order to trade the gap successfully. Which stocks does it work the best with? What type of volume do we look for? How much of a gap higher or lower in the morning do we look for? And most importantly, how do you calculate the specific price where these stocks will trade to like a magnet and have a price reaction from in the other direction? That is the most important component of this strategy, and traders learn exactly how to make these calculations each and every day. The other thing I do is give traders an opportunity to get my gap trade sent to them each and every morning at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the market even opens for trading. Here's a copy of today's email. As you can see, it arrived at 9 a.m. And because it was a wild day yesterday and today in the market, I specify today's market carries significantly more risk than normal. Please be careful if you're trading and use stops accordingly. Always make sure you can come back to fight or trade another day. It's very, very important for each individual trader to assess their own risk. So we did have several potential gap trades on the board, and what I did this morning because of the volatility is I picked price levels on these stocks where if the market really was getting crushed again at the open, that we were far enough away from where these stocks were in the pre-market trading that we weren't going to get whipped out of a trade in a couple of seconds flat. So what we had was YY, the second one down. You see where I say gap lower, support levels are $115, $107.61, and $100.22. These are all independent trade levels from one another. So if a stock reached $115, gave us the type of profit we were looking for, and later on in the session came down to hit another level, it produces another trading opportunity. That happens more than you would think. Stop and profit target is about 75 cents to $1.50. Keep in mind, these are minimum profit targets. Listen, on a day like today, we were very fortunate to get one trade that was painless, stress-free, and worked out fantastic. Now we're on a 5-minute chart of YY, and as you can see here, the stock closed yesterday at $121.19. The stock was opening lower, qualifying for one of our morning gap trades. And as you can see, the $115 represented by the horizontal line running across the screen, the stock came right into that level, traded below it by just a few pennies, and immediately had a rip higher. And in 15 minutes of trading, the stock made a high of $125.27. Now, in my course, traders learn exactly how to take advantage of stocks that are running far past our minimum profit target. We learn how to take trades like this and turn them into risk-free, emotionless trades, which enables us to get the most profit possible out of trades like this. But this isn't all. There's another component to the course, which is called the gap fill strategy. Let me show you what I mean. Remember this list from the morning email? Well, if we scroll down, I give a whole list of gap fill trading opportunities that are available for each and every day. So we had a bunch of these fill their gaps today, but let's pick out 3 real quick and just show you what happened. So the first one we'll take a look at is data, which is Tableau software. And you can see in the middle column, I specify that the gap fill level is $77.09. It's listed as a long trade, meaning that we're willing to buy the stock at that price. We'll go to the chart in a minute, but let's take a look at the second one, which is ALXN right above it. The gap fill level was 109.64. We're again willing to buy the stock at that number. And the third one we'll take a look at right above that is NAV. 42.19 is again the specific price that we're willing to buy this stock at. Let's go to the charts and take a look exactly what happened at these particular trades. Here's data. You can see what happened. The stock later on in the morning session, it did come down to that level, 77.09, traded slightly below it, well within the stop loss limitation, and now the stock is at almost $79 a share for almost a $2 gain, and the day is still young. The next one on the list we'll take a look at is ALXN. 109.64 was the level off the morning email. You can see what happened. Pierced it only by a penny or two, and look where the stock went immediately following the hit of 109.64. The stock just minutes later was already at a high of 113.56 and is still trading well above the entry point of 109.64. The third one we'll look at is NAV, $42.19. You can see what happened. The stock came into that level, pierced through it by a little bit, but within the stop loss limitation, and look what happened, a tremendous rip higher. The stock just minutes later was trading at a high of $44.92. Another tremendous rally off the gap fill level given out at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the market even opened for business. Folks, both these strategies are taught in my course, and I give these trading opportunities to traders that want them each and every morning. Even on a day when most traders were running for the hills, we still managed to find plenty of opportunities on stocks where they traded to the specific numbers where we expected them to trade to. Now keep this in mind. When traders learn this specific strategy, this gap trading strategy, it gives them a certain level of expectation. Traders learn what to expect when stocks hit certain price levels, which changes their outlook on day trading. It takes a lot of the guesswork away from trading, and it replaces the guesswork with confidence because you have a specific expectation of what's going to happen at certain price levels. That's something most traders don't have, and it's required and paramount to have success in the markets. We need to have confidence. Once you have confidence, the profits follow. If you want to learn everything there is to know about trading the gaps successfully, come over and check out the course at lazygaptrader.com. I'm David Frost. Thanks for tuning in, folks.